Hello and welcome to the Bankers Tech Talk video series, looking at all things fintech. We've been going now for about 6 years, and you can watch all the previous episodes on thebanker.com/tech talks. I'm Joy Macknight, editor of The Banker, and this week my guest is Henry White, who's co-founder of Finance Unlocked, which is an edtech platform used by banks, asset managers, and law firms. Thanks so much for joining me, Henry.
Thank you very much, Joy.
So what sort of talent challenges do both banks and financial institutions face today?
So the most significant challenges that they face are talent and skills shortages. Now, this was seen and identified by the Financial Services Skills Commission that was assembled around a year ago to tackle exactly this problem. And more recently, in the Khalifa Review, which specializes in fintech industry. More personally, what we've seen on our travels is a lack of diversity of talent, so particularly in gender and race, a lack of mobility of talent, so within an organization, staff not having the skills or opportunities to move internally, a lack of retention being a problem. And lastly, I suppose, is firms underinvesting in training solutions. And when these solutions are available, they aren't typically taken up as much as they would have liked.
Okay, so what do you think banks should be looking for when they're thinking about modernizing their learning and development or L&D platforms?
So I think banks should be looking for three main things: alignment, engagement, and scalability. In terms of alignment, we're really seeing this at the moment between the regulators and the banks to begin with. So the regulators have just brought out the SMCR, which is the Senior Managers Certificate regime. This is where regulators are driving an improvement in culture, governance, and accountability. And so really training is no longer just seen as this tick box exercise. It's becoming really fundamental that all these institutions have to do continuous professional development as mandatory. And so then this alignment, it then becomes as well between the providers and the learners and the banks themselves. The banks and the learners are now demanding this high quality content, and so the providers essentially have to step up. So secondly is engagement, and within this, if the content or the training isn't engaging, then ultimately it's not going to be consumed, so it's a pretty fundamental. And lastly, scalability, particularly in a post-pandemic world, there needs to be maximum reach. The classroom solutions no longer really cut it, and so the products have to be disseminated across full organizations.
And then how does Finance Unlock really reimagine how to deliver L&D for the banks?
So we came at this from a problem-first perspective. Before we even started the business, we conducted hundreds of customer interviews, and we really saw them kind of group into some broad themes. So firstly, mid to senior level staff were too-time poor to train themselves, and they were actually too-time poor to train their juniors as well. We saw classroom training becoming kind of obsolete in the pandemic. We also saw kind of digital solutions not being taken up or being quite hard to use. And it was actually remarkable how many people said to us that they resorted to YouTube for learning. So would watch 10 videos before they could decide who to trust, let alone who to learn from. Now, this is obviously incredibly inefficient, particularly in a professional environment. And so our conclusion was that financial professional training was essentially broken. And then within these customer interviews, if you actually look at the people's needs and desires, they wanted to be more knowledgeable. They wanted to improve themselves within the workplace, and they were willing to do this training at home in their spare time if it was relevant enough. So what we created was really a solution to directly meet this problem. We wanted to create a brand which people could emotionally connect with and resonate with. We have developed a product which is very familiar, not being too complicated, so the likes of a Netflix or a Masterclass. And we are a tech-first business, so we evolve with our customers' needs as they're ever-changing. And content-first, so we deliver premium-level content. We have over 100 experts and endorsed by the world's leading financial institutes. And what this means is very premium video delivery, all packaged up our average video engagement rate over the past 6 months has been 92%. So beating both the education market and the entertainment market alike.
My last question is about the funding round that you did recently. So in January, you raised like 1.7 million pounds. How difficult is it to really raise money in this environment?
Sure. So our investors typically had a finance background or a technical background. From the finance side, they really understood the problem, and so regardless, were quite excited about the opportunity. On the technical side, they were really excited about producing a scalable product to tackle this problem. If we look at the types of businesses that did well over the pandemic, the likes of edtechs, fintechs, future work businesses, you look at the IPO of Coursera, the acquisition of Slack by Salesforce, or HR solutions further entrenched into institutions such as Workday. And so Finance Unlocked was lucky enough to kind of fit within these categories. And with our 3,000% increase in 2020 of our user base, it became a pretty, became an oversubscribed round really for investors coming in. And more practically and interestingly, we halved the length of our investment round by essentially doubling the amount of meetings we were able to do in a short period of time. So because of Zoom and Hangouts and not meeting physically, we're able to cram a lot more into our days. And actually, very interestingly and anecdotally, I actually haven't met face-to-face any of our new investors, despite them being invested for the past few months.
Excellent. Well, thank you so much for your insights, Henry.
Thank you very much, Joe.